The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host on a Friday. Thank God it's Friday. And of course, these weeks where there's a lot of earnings, I listen to as many of the earnings calls as I can. And boy, to try to keep up with them all, I get a little tired. So come Friday night, I'm in bed probably fairly early. I was up about 6 o'clock this morning listening to a few more. Mostly these are all, of course, in the tech sector, just to hear what they're saying. And, you know, you can read it all, but there's a lot of inflection in their voice and maybe what you can read into that's lost in print. I like listening to it and working on other things, why I do listen to them. But anyway, I've listened to them all. We'll be talking about earnings in the 4 o'clock hour with Tom O'Brien. And I think there's a few things that are very interesting. I think that there's a handful of stocks that are just going to stay up or far last most of the shorts, a handful of them. But the market looks to me like it is very tired, just very tired. But, you know, what else can you say about it? We've got some things that are very interesting out here. Going into a weekend, gold selling off almost $18 at 1177. We saw all those, and we showed the Gartley patterns in a lot of those miners earlier in the week. In fact, Gartley patterns have worked very well this week, and they're kind of like everything else. If you have one Gartley among a ton of stocks, gold stocks, or whatever they are, financials, that's one thing. When you get a bunch of them all at the same time, you better watch out. And I suspect that we're going to see at least a pullback to those C points, the previous C points in those Gartley patterns. But pretty much underneath, about that 1182 on gold kind of was a level that you probably wanted to hold above. This kind of opens up the 1125, 1130 area and possibly a whole lot lower. The other thing, of course, is the dollar index. It's off 31 cents today. You would think that off a little, gold probably up a little, and that it couldn't hold 1200. It's pulled back in these ranges, starts to look fairly problematic, along with the miners. But what else can you say? S&P cash, of course, is up about 5 points, 2.1 billion shares. So we're what, 180 million short of the show open yesterday. Not uncommon for a Friday. But just looking at a lot of the stocks, there's a very handful that are holding up the entire Dow and the S&P. Without them, we wouldn't be, we'd probably be significantly down. Of course, the big news is at least a couple of stocks out here popping higher, which is what most everybody, at least on financial infotainment, is focused on. A lot of stocks down with some energy today, and we'll get into those later. But as always, we like to start off with just a little bit of history.
Then it's all just a little bit of history repeating.
On this day in 1968, IPO mania is in full fury on Wall Street. No different than the dot-com era, no different than 1929, no different than everything else. People all think that we're a lot smarter than we were 50 years ago. We know a lot more. We're not any smarter. I don't think human nature has changed, nor IQ levels. We stand on the shoulders of the people that come before us. But there's one thing, and that is most people will ignore future history at their own peril. On this day in 1968, IPO mania is in full swing, and there is a company called National Student Marketing Corporation They sign up undergrads to flog vinyl LPs, employment guides, posters, and other kinds of crapola on campuses nationwide. It's a huge hit, offered at $6 a share. It surges 133% to close the first day at $14. What? That only happened in the dot-com era? Oh, no. This is how it happened throughout the history of the U.S. stock markets. But it trades at roughly 100 times earnings. Guess what? In 2 years, the company founder, Court Randell, is on his way to the Huskow for stock fraud, and the stock trades below $1 a share. And I think it went bankrupt shortly after that. But there's nothing new in Wall Street. Of course, I think this day also in 1986, was it? 1986? That we had a famous junk bond trader also plead guilty. I'm trying to remember what the deal is on that. Hang on just a second. I'll have it here. But I kind of reminded me of this day because we've done it before. Michael Milton. Yeah, it was 1990. Excuse me. I think what he was doing was in 1986. But this day in 1990, Michael Milken, the former junk bond king, pleads guilty to 5 technical counts of violating securities laws. He's later sentenced to 10 years federal prison, but was, I think, released in 6 for good behavior. And, of course, he had a wad of cash before he went in there, and even paying after his fines, still had a wad of cash. Has spent most of the rest of his life using that wad of cash for good instead of evil, and does a lot of charity work now. But he went to jail with a lot of money and came back out with a lot of money. Not something that normally happens for these folks. He was just the abundant greed of that time. But boom bust cycles never change. And, of course, almost nobody can tell that they're in the bubble when they're in it. And what else can you say? Other things of interest going on. We've talked about before, especially in the past, although it hasn't happened in a long time, maybe 10 years, 8 years or so, where phony articles come out and press releases and earnings statements. It looks like people not being able to do that here are trying it in Europe. And earlier this morning, shares of Italy's second largest bank spiked lower abruptly after an email was sent around that said the company's CEO was stepping down. If you look at a 5-minute chart of this bank, it looked like a heartbeat monitor. It just went straight down, a little V, and 20 minutes it was back up. But it lost about 20% of its value in a matter of minutes and regained it all in 10 minutes later. But tricks still going on, and in a jumping market, that's all it takes. Greece is still the word. It is the word. It's got a groove. It's got a meaning. And my guess is that we're going to see the Greek matter blow up this weekend. There were some very, very harsh words overnight and this morning for the Greek finance minister and the prime minister in Greece from a lot of people in the EU. Middle finger salutes, other stuff like that. It hadn't been played up in the press. I saw it kind of quietly in the background, and they didn't do it in front of the cameras. But apparently there's a failure to communicate with the socialists/communists that are certainly in the Greek leadership these days. And it sounds especially like a lot of the smaller countries are saying, hey, we got our house in order. Why do these guys get a ton of cash? If you give them a ton of cash, we're getting a ton of cash. And it continues to look like they're putting more and more pressure on the Greeks. And they are becoming less and less compliant to do anything. In fact, they're wanting more, not giving more. My guess is that from the heated debate, that we're either going to have a slight chance this thing gets solved this weekend or a much bigger chance that this all blows up. The Greeks are out of money, and they got to have cash, I think, Monday or Tuesday. And my guess is that the revolt from the rest of the smaller nations in the EU, especially the Nordic countries, is going to be overwhelming, in that they're not going to stand for them throwing wads of cash for people that don't want to work and don't want to pay taxes and don't want to do anything. And pretty harsh words going back and forth. But we'll find out this weekend. But I'm kind of thinking that we get something. Normally you get a lot of food fights and yelling and screaming. Food fight! It was a food fight over there, apparently. And you get a lot of that kind of screaming right before they come out with a big announcement, one way or the other. But my guess is that there's not going to be any cash for the Greeks come Monday, and then that may force the matter to just kicking them to the curb and out of the EU. Other things of interest out here.
And now, deep insights and random thoughts.
A lot of you folks know that I spent most of the, 89 through 2001, 2002, flying around the world and going to various trade shows and stopping in on places like CNN and selling video equipment. Some of the stuff that I designed, some of it was just looking at things, trying to get ideas for other products. And one of the first things I did, probably 1991, 1992, was pop in to a CNN affiliate, and they showed me a tape. It was kind of the days before YouTube and everything going viral and video rants and everything else. You basically got a dub of a dub of a dub of a tape. And there was this dub going around of a guy, and basically someone had edited it out. He was doing an educational video for Winnebago to the dealers. And well, these videos were just incredibly laced with profanity and yelling and screaming and insane references as this guy tried to show all the features of Winnebagos to the unwashed masses that had to sell them out there all over the country. It was hysterical and a cult all the way through the 90s. And everybody was always looking for one better dub that they could find. In fact, you can go to YouTube and just type in Winnebago Man, you can see it. But there is a great documentary, and with movies being pretty horrible these days, just a bunch of things blowing up, not a lot of stuff interesting me. You might want to check this out. It is one of the best documentaries. It's now on Netflix. It's called Winnebago Man. A lot of F-bombs, a lot of other bombs out there, but that's the extent of it. One of the best documentaries for a man they call the angriest man in the world. We'll be back in a minute, but check that out.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. Got a lot of stocks that are moving on earnings here. We're going to try to get through as many as we can. Again, I'll be in the 4 o'clock hour with Tom O'Brien, and we'll be taking a look and see how that. But it's been kind of quiet in technology with these earnings cycles. We've got a lot to talk about in technology. Some scary stuff, some good stuff, some warnings. We'll be talking about that with Tom O'Brien. Again, about 4:20. Anyway, of stocks of interest that are moving out here, we've got a ton of them. And Aaron's Rents is the first one. It's headed back up to the highs. It's been kind of weak out here, but it beat its Q1 consensus and guided its fiscal year above consensus. They've had a quarter where the market looked like it was getting better, jobs better. This, of course, is one of those buy here, pay here kind of things. Rent to own for a television, other things like that, washers and dryers. And, of course, when things are going good, they don't have as many customers. When things are going bad, people don't have a lot of cash to put down and need something like a broken washer or television and don't have the cash. They'll pay twice as much for the TV or washer going through these guys, but they can pay it off at a slow monthly rate before they miss a payment and get it yanked away from them again. Anyway, old Aaron's back up to the highs, but the volume is going to be light. The $33.71 spike on February 6th came in with 1.6 million shares. Basically have about half of that so far today. So keep an eye on that. Of course, the news du jour of the day is Amazon. Caught a lot of shorts napping out here. And yes, this is setting up as a huge move out here. You've got now 2 massive gaps. And guess what? You can probably expect a third out here. You know, I don't know what else you can say other than that. But you've got 2 massive gaps on massive volume. The volume is probably going to be a little less than the first one. This is setting up for that classic 3-gap play. So this is pretty much on earnings. So I'm gonna expect the next earnings cycle also to probably have the next gap up. This was one of the few stocks that actually beat significantly for what was expected in the options move. They were looking at a plus or minus 30 points. And of course, this got a great deal more. What you find out about Amazon is that their business that you think about, both the streaming video and the retail side of their business, not much changed. So what did change? Their cloud services business is making all the cash. They continue to expand all their businesses for the retail business, so they're not making any cash there. And was it that much better? The answer is no, but there were a huge amount of shorts coming into this in the last few days, and I don't think anybody expected that they would be more than a 15-cent loss, that they were at a 12-cent and on the wrong side of a huge short interest. Pretty much allowed them to feed the shorts buckwheats on this one. And if you don't know what buckwheats are, they're a slow, painful beating. Except this one actually, I guess this one doesn't work because it was a sharp, painful beating, fast beating, all one day out here. But certainly is a setup for one more gap higher. And you'd want to take a look at that. We talked about how the gaps, how the Gartley patterns in housing had all set up, and we went through those yesterday. Of course, home away in that business, and I should have thought of this because this one would have been a good short. I suspect it did. If it would have gone out there and tested that February 25th high, I probably would have taken this as a short. The energy was extremely light out here. It's back down with heavy volume. We got your previous low on February 2nd at 25.13, and that's just a couple more bucks down. Doesn't sound like it's going to be too far away. We've got a few of these biotechs that are starting to really look sad. My guess is that we are probably a day away from calling a top in the IBB. Maybe Monday, Tuesday. There's a few more biotechs next week. They don't look very well either, so we might be able to see some movement in that. But Biogen down on heavy volume. You know, what do you got? A nice gap at about 360 out here. If the IBB rolls over, that's where I'm looking for this thing to go. Anyway, we will be back in a moment. Call me at 877-927-6648. Email me at path@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com. nadex.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Up 5 points on the S&P cash. Volume is light, 2.2 billion shares. And we'll continue to keep an eye out on this. And we have an escapee. Come here, little baby. Come here. No? Little Vixen has escaped from her room and has decided to come in on the set. But she was scared by my voice. Anyway, we've got a nice little move out here in Cephide. CPHD is the symbol on that today. Beat by 16 cents. Nice little pop up here. Like a great deal of these stocks, they have broken with volume the previous highs, but have moved right back in to the trading zone. This is a very mysterious pattern that continues to have me scratching my head. These stocks are not operating correctly. They're more than willing to sell any stock on a pop right now. And maybe that gives you a little bit of a pause for this market. Juniper came out and basically a lot of people were looking for really bad numbers on it. It beat on revenues, guided way up on its EPS in the second quarter, and upgraded by several other people. This one was a decent breakout, and it does have volume. So keep an eye on that. It's back up to its previous high on what is that, April 22nd, 2014. So it's back up to that yearly high, but it's going to have a lot of resistance going any higher than this. Energy pretty good so far on this leg back up. And the Internet of Things is driving a lot of these internet companies fairly well. What else do we have going on here? NEM, Newmont Mining, came out. It had a nice little pop out here today. Back up into the gap down with, what is that, 11.5 million shares. It's only up on 8.6 million shares today. And, of course, most of the gold spectrum trading down today. Gold at 1176 right now, off about 18 on the day. RBC Capital, or was that Regal Beloit? What did they have out here? Nothing that sounds that exciting. What else? Starbucks at a all-time high out here. Guess I only have like Starbucks once every month or 2 months. I'm not a big coffee drinker. Don't have it in my home. It's not that I just always tasted like muddy water, and it may be what my mom said passed for coffee. But I always liked the smell of it. I always thought it tasted like dirty water, unless you pay $5 or $6 for it at Starbucks. I've never figured out that I need to spend that kind of time and effort getting on it. I'll have a little bit of orange juice. Nice second gap up on it, too. And you can make a case that this isn't a three-gap play also. Would need a little bit more of volume before the end of the day. It's good, but you'd want this thing probably coming in another 3 million shares before the end of the day. But good. But you want just a tad more to be on the safe side. And, of course, I don't know what else you can say other than people have become as addicted to these, getting their coffee there, as people to getting a donut at most of the donut places 10 years ago. Now everybody wants to be healthy, so they're getting a huge dose of coffee. But kind of tough to see out there. Reported Q2 EPS in line, revenues in line, guided Q3 in line, and basically say that their EPS for the fourth quarter, though, is going to be below consensus. Reaffirmed all the year's EPS, though, and a bunch of upgrades from all the usual suspects. But everything you're looking for. Needed 22 million shares. Well, that's going to be the tough part. You needed 22 million shares. You got 15. So you need a bit more out here. Let's go to Bill in Colorado Springs. How you doing, Bill?
David.
Have you been buzzed by the Air Force there today yet?
Not yet.
Okay.
They want to, though.
I think they would.
I was looking at Frontier Communications, and I was interested in your observations about it. It's kind of the throw-off partner of Verizon, you know?
Yeah, they just bought my internet service down here in Florida. So awesome. I'm very familiar with them. I'm very happy with the speed I get. Worldwide, it's a lot more expensive than everybody else pays anywhere else in the world. But here in the United States, it's about, unless you get Google Fiber, it's about as good as you're going to get. There are a couple things that are really weighing on Frontier, and I have a feeling why Verizon cast it off. The first part is that they're going to inherit the internet part of the company and, of course, the video part of the company. And even the part that Verizon's keeping, if you saw the news in the last day or so, they're going to start breaking up the bundle so that they can get rid of the ESPNs who charge the most but won't let them have any of the other stuff if they don't pay up for ESPN. So the beginning of the unbundling is starting, and the idea is that it's going to be overall lower revenues for Frontier and all these other cable companies in the near future. I don't know.
That's interesting. I suspect that's going to run into a lot a lot of kludge and problems, you know. But if you look back on that day of July 29th, 14, that big spike up was some kind of court decision allowing REIT status of towers, or, you know, it was some sort of bizarre ruling on property being able to be reorganized. I don't think Frontier envisioned taking advantage of that, but that's what that particular spike was. I owned it, frankly, in my Roth for the quite, you know, dependable 6-7% dividend, and you know, and they even actually increased it slightly. Now, when they announced they bought the Verizon assets, I sold it at 832 on that run up, and I just bought a leg back here at the low 710, 15 area, because that was the high in the November 14 area, and I just don't see a lot of downside unless.
Yeah, I don't see a lot of downside. I don't see a lot of upside.
But it's 7%.
Yeah. Well, if you want to keep it, that's fine. But like I said, I'm not expecting this thing to go up. So if you're happy with the 6%, that's fine. I just don't see a whole lot of reason other than if you're happy with 6% to keep it, which I wouldn't be. But I can understand now a Roth or something. Maybe you'd be looking for that as an investment. But as a trading vehicle, I don't think you have a lot here. On the street, they would call this dead money. It ain't going anywhere fast, right?
Well, that could be me, dead money.
Yeah. No, I mean, that's basically what they would say. It's one of these dead money stocks. You're going to get your 6%. It's not going to go anywhere very fast or very far.
Hey,
and the only thing is, as time goes along and more people stream everything instead of use cable, the revenues are going to come down, and I would imagine that over time your dividends are going to come down too. Probably not going to happen in the next 6 months, but in a year, yeah, I could see that your 6% goes to 4% and then 3%, 2%. So any kind of long-term hold on this, I would not be bullish on, even just on the dividend side. There's just too many factors that are going against these companies as cable companies, even as the internet part of the FCC, basically making them common carriers, kind of takes care of a lot of problems where these guys may have been able to gouge customers for higher rates. It's going to be a lot tougher for them to do it now with the FCC, because they'll have to go in front of the board and show cause. You probably saw the Time Warner Comcast thing blow up today, right?
Yeah.
And, you know, if something was going to move the stock, that certainly would have been it, at least part of it. But I'm probably going to get in it with Tom O'Brien. But the reason that Comcast and Time Warner split was yesterday or the day before, I think it was yesterday, that they were going to have hearings on the sector, and nobody wanted that, because they know exactly what was going to be, which is they're going to drag out all the dirty laundry that these companies have, and they've got a ton.
Wow.
All you have to do is go to YouTube and listen to the customer calls for people that have tried to cancel their accounts from Time Warner. I mean, it's legendary how horrible these people have been to their customers. I don't know much about Frontier. Verizon's been okay. They haven't been great, but they've been okay.
I think that's where Frontier has tried to excel, that they are better at that, and they are focused on, they're focused on a geography that is unlikely to have a great deal of alternatives.
Competition. Yeah. There's no competition in the whole United States, though. Most places it's a monopoly, and at best it's a duopoly, and that's pretty much it. But to me, my fear would be that these guys get in a brawl and the FCC starts dragging out all the dirty laundry on these companies. And I don't know how much Verizon's stink would get on Frontier from the days that, you know, what they bought. So
Yeah.
I would just say that you probably don't want to be on this train any longer than the next 6 months, maybe a
Hey,
year,
appreciate the advice.
and get out of it. Because, like I said, it's dead money, and margins are going to fall, and there's going to be more competition from Google. It looks like they're really going after a lot of these markets for high-speed internet. And, of course, now that a lot of these companies can't advertise that they have broadband because the FCC upped the requirement to 25 megabits a second, a lot of these companies will be can't even advertise broadband. So I don't know how much of Frontier's, I don't know what they do, the rest of them, if they've got FiOS-like connections somewhere else where they're available. If they bought this just to get the FiOS part out of...
No, I don't think so. I think they have high-speed alternatives. They're also big in Connecticut. They just bought Connecticut from AT&T, I believe.
See. Yeah, so they're probably just buying up this stuff. It's going to be a long, good market, but my guess is that over time it deteriorates. I just don't see this as any kind of long-term thing. And this is the kind of company that doesn't, like you said, the people that want to buy it probably want to own the dividend, but I just don't see the dividend ever going up. I think you could probably make a good case that over time it slowly goes down as new and better alternatives come out.
Hey, have a good day. Thanks, Dave.
You too. We're going to go on to some other stuff, but you can be like Bill in Colorado Springs and give me a call at 877-927-6648 or email me at path@tfnn.com, or you can post a message in the den like Mitch from Boston did, and he's wanting to look at ARIA, ARIA. Like I said, there's a lot of these stocks in the biotechs that look like they're topping out. This is certainly one of them. This thing, would it have a spin-off or something? Or a big miss back here. But it's back up, even if we just look at it in a shorter time frame. What do we have out here? You've got two... what do we got here? Try to get back in here. You've got two highs. The first one was on 130 million shares. The next one came up with 28 million shares. You're back up at this with $9.89 with 4.3 million shares. So if that's right, this thing is pretty light back up, and this looks like it's in a higher trading range. But I think I see a lot of these companies. I'm trying to remember the ones that report on Monday and Tuesday, but there's some biotechs. I looked at them last night, and they looked fairly weak to me, which makes me think that, especially with the BIBB today, BIIB today, that you've got some interesting moves out here. What else is moving out here? DDD. This thing had a great long-term test of its low. We bought it and got out of it because I didn't like the way it was acting. But it did go up to 32.88. We were buying it about $27 or so, $27.50. But didn't like the way the thing was acting and went sideways for a little too long. Down on heavy volume, that 3D printer business still has not come back. I don't know what else you can say about it other than that. Do I have a right here? We'll get one when we come back. Still got a little time left to go here before the end of the day.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we have a special guest on the show here for the last segment. That is Vixen. She escaped earlier and was out roaming around the studio, so I thought I'd bring her out here. You'd seen El Diablo, the trading dog. This is Vixen, his sister, and they accompany through the quiet days that I normally have here by myself, trading kind of a lonely, sedentary lifestyle where you spend a lot of time by yourself. And Vixen is a Maltese Schnauzer mix. So Vixen is a correct name for this little troublemaker. But she's pretty good. Now go play. Go over there, sit down somewhere. Anyway, we've got a good day out here. We've got a little bit of selling that's come in, and this has been the pattern for the last 3 or 4 days. I'd have to go back and look at the minute charts, but start seeing about this time, start seeing selling in the S&P, and normally we close down a little bit more. Maybe it's been a week. Seen people volume at least pick up even on good days. where they are selling into some of these moves. We had a high of 2120 on the S&P cash, actually 2120.92. We're at 2116 right now, 73. Volume has been infinitesimal during the last 30 minutes. I mean, no volume whatsoever. 2.38 million shares. I think we did in the last 30 minutes 180 million shares, which is nothing. So expect some fluctuations, market flatulation, and it'd be interesting to see what we have going into the close. Without a couple of stocks, we would probably have a fairly decent down day. And those few stocks have been pushing what was going on out here for most of the day. We were talking about 3D Systems. This is coming back. There's pretty good support on this thing, about 2650, and could have been a lot worse for as bad as the earnings were in this. It's sister stock SSYS in the, I don't know if you could call either one of these big caps, but big caps in the sector. In and down on sympathy. This, of course, had horrible earnings. It's coming back down to its February 3rd low at $51.55. So none of these doing well. In fact, I've seen a lot of these stocks like DDD have these kind of really fast blow-offs and blow-off tops from what we've been looking at. That is, they've come all the way up, and then all of a sudden they just get a lot of volume on the downside coming back into these earnings. But you can tell with stocks like these that have super high short interest, like 3D Systems last time I looked was 40% or more short. That's the downside to those stocks is even when you're right, there are a ton of people down here that have or want to buy to get out of these on the right-hand side of this chart. And a decent amount of shorts is okay. Huge amounts of shorts like these have, and even when you're right, you don't make that much money. Like I said, this should have probably been hit a lot harder, but it looked to me like there were a lot of people wanting to go ahead and cover their shorts at the end of or during this day. So I see Tom O'Brien is warming up in the bullpen. I'll be over there in the 4 o'clock hour, and 4:20, and we've got a ton of stuff to talk about today in technology. It was kind of a quiet week last week with Coachella and everybody out at the music festivals out in California. That's all over. Everybody's back to work. We're in full gear with earnings and some scary stuff in biotechnology. 25 years, the Hubble's been in space. A lot of stuff to talk about today in technology with Tom O'Brien. In the meantime, sell when you can, not when you have to, and we'll see you on Channel 14, Tiger TV. Same bat channel, same bat time. Hang on for Tom O'Brien.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.